Numsa strike in the metal and engineering and steel industry looks set to continue into a third week. Since yesterday, the union has been consulting its 220,000 striking members countrywide regarding the employer's new offer of a 10% wage increase. The union says the consultations continued today as it could not reach all those striking workers yesterday. It says it will announce the outcome of the process on Sunday, so there's little chance that the strike will be called off at the end of this week. So how do you solve a problem like the South African economy? It struggled to grow in the first half of this year. More than 200,000 workers in the biggest union went on strike last week, just 1 week after the platinum mining strike ended. It was also a week of disappointing economic data, with mining production falling by more than 6% in May. The majority of economists in a poll released by Reuters today believe that the Reserve Bank will now wait until September before raising interest rates. Lower rates help boost the economy as people pay less on their debt and therefore have more to spend. But the bank has warned it will have to hike rates at some stage to deal with inflation or rising prices. Well, the bank's Monetary Policy Committee meets next week. For a global investor perspective, we're now joined on the line by Standard Chartered's Razia Khan. She's with us from London. Good evening to you, Razia. What do you expect from the Reserve Bank next week?
Well, I suppose we're in the minority thinking that maybe there is still that slim probability of an actual rate hike, maybe a very modest rate hike. 25 basis points has been spoken about, but equally we wouldn't be entirely surprised if the Reserve Bank decided, in view of the very weak economic data, to hold off on that and perhaps delay it until September. What is at stake here? We know that the Reserve Bank has said pretty consistently that low interest rates cannot be the solution to the South African economy's problems, that the core function of the Reserve Bank, the core mandate, is price stability, and they should be thinking mainly in terms of that. While the economic data is weak, we can't shrug off entirely the May inflation print rising to 6.6%, the expectation that inflation will stay elevated above the Reserve Bank's formal 3 to 6% target for some time. So it's a very difficult situation all round.
It is really between a rock and a hard place, the Reserve Bank. You're talking about inflation going up, and we have already breached that targeted ceiling. Some say it's going up even more than expected. And Eskom, analysts are saying, will need even bigger price hikes. And of course, that, Razia, is a big driver of our inflation, administered prices.
Absolutely, and one could argue that that's not necessarily the kind of inflation that is demand-driven. You basically use interest rate tools when you think there's a need to dampen down demand, and there's little sign of anything approaching robust demand in South Africa. Even so, we think there are other considerations at work. The Reserve Bank has always stressed its role, the role that it can play in terms of influencing and shaping, to some extent, inflation expectations. The concern is that we had seen a period of sustained rand weakness. A lot of that, even though the rand has strengthened from the levels we were at in January with the last rate hike, a lot of that is still feeding through into the inflation profile of the country. And against an economic backdrop that is weak, where the Reserve Bank nonetheless still maintain pretty accommodative monetary policy, the concern is that it might just send the wrong signal in terms of the seriousness with which the authorities intend to tackle inflation. There is another school of thought that says, if you look at the weakness of the South African economy, okay, we understand the point about the strikes, but it goes a little bit beyond that. Increasingly, South Africa is becoming a more expensive place to be producing. In this environment, even given the weakness of demand, it is still very important to send the right signals about price stability and the intent of the authorities to shape inflation expectations in the right way.
Razia, before I let you go, let's quickly talk a little bit more about the state of the economy. Last time we spoke, I think the economy had contracted in the first quarter. We did avoid a technical recession, it seems, looking at data that came out yesterday. And I think that's what you were saying, that we would avoid a recession. But what happens now in this quarter, the quarter that we're in, given the Numsa strike?
Well, this is the problem. The thing about avoiding a technical recession is that after you've had an outright contraction in one quarter, it is very difficult to get that again. It does occasionally occur. But what we are seeing with the new strike activity in the South African economy, still little visibility on the resurgence of demand in any meaningful way. And let's not forget that policy has been accommodative for some time. The expectation is that the Q3 data could be impacted negatively as well. There really isn't enough to suggest that the South African economy is growing sufficiently rapidly to really lift growth momentum, to create the so-called escape velocity that might be needed to move it away from this place of very weak growth where it seems to be caught up. And that, I think, is the bigger concern, that the news just doesn't seem to get any better.
Unfortunately, we leave it on that bleak note, but thank you so much for your time this evening. Razia Khan from Standard Chartered Bank on the line from London. Let's look at the numbers now. After languishing in the red basically all week, the JSE ended higher this Friday, with the banks by far in the lead. The all-share index rose by 1/3%. All the major banks except Nedbank ending higher, with Barclays adding more than 2.5%. Now that's after it released a trading statement saying it could see an 11% hike in earnings. The retailers also had a strong day. Massmart up by 3.5%, Woolworths by more than 2%. Now, at the same time, Sasol's announced that the European Court has reduced the fine for its involvement in a European paraffin wax cartel by more than 168 million euros. That share basically unchanged, though. The miners preventing better gains on the market today. The gold miners fell by nearly 1.5% as a group. Big miner Anglo also fell by more than 8%. But among the platinums, Longman and Impala both rising by more than 1%. A quick look at the actual commodity prices. The metals trading higher at this stage, but only just. And the rand weakening today, currently trading above 10.70 as that strike drags on. Great to have you with us on Business Review. More after this.